do we see the equity markets recover? And I know this sounds like a broken record conversation that we're having, and I suppose we've had it multiple times in the past. But yeah, exactly. But honestly, realistically, everyone keeps saying that the uplift is going to be coming in for China equities. I can't tell you how many times I've heard people suggesting this and talking about some middling flow coming in, and that must mean that people are starting to get exuberant about it. But then they just get slapped down from any magnitude of news flow that we get coming out of China, whether it be into another developer breaking down or anything else. So should we really be testing the waters?
I think we should, and I think again, I know this is kind of funny and Groundhog Day for the last 2 years, and I accept that, right? The market has been structurally difficult for a long, long time. The market in itself and what China represents globally is still too important to ignore. The size of the market, the magnitude of the market makes it a play that you still have to have some level of involvement in. Most of the global funds went underweight a long, long time ago. Slowly, they're trickling back to equal weight or slightly below weight. So we're not talking about a huge upswing in terms of sentiment change. But I do feel that the market in itself has been dogged with two problems. Definitely the onshore issues, but also the fact that global markets have done so incredibly well. So it's very difficult for an international fund manager or fund to start putting money back into China when the other bets that have got on going around the world, and Asia specifically as well, are doing so incredibly well. So it makes it harder. That being said, we're starting to see the shine come off a little bit in the US and some in Europe, especially in the tech side. So you're starting to see a little bit of that money trickle back in. Also, I would like to add that we're probably still a long, long way away from any catalytic event in terms of really fundamentally stamping down and putting your money to work into the China market as we led up into sort of late 2021 and early 2022. That's still long, long, long way away. But if you look at some of the names, they're starting to perform. They're starting to get back to levels. But again, look at the Hang Seng Index. We struggle at 17,000. It seems weird for me to say that, but 17K seems to be such a massive resistance level. And I don't know what we've got really in store in the short term for us to push through that. So my view is that, again, and I said this probably last time I was on, as a natural hedge for probably a global investor, having a small overweight or a small position in some of the kind of tech names and some of the kind of e-com names, maybe even some of the onshore consumption type plays, kind of makes sense at the moment if you feel that the US and Europe has kind of run a little bit ahead of itself. And I noticed on your previous presenter that they were talking about overvaluations, and I kind of see that. On the contrary, China completely undervalued, right? So you would start to think that theme of money movement starts to continue to grow and grow and grow.